Can anything actually stop this market? Tariffs, Trump, Nvidia, Tesla, Musk, nothing can stop this market. The economic data keeps surprising to the upside. Wall Street missed the lows. They are chasing. Do we hit all-time highs from here? Let's talk about it. Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks climbed on Tuesday as upbeat economic data helped counter concerns raised by the OECD about the potential economic harm from President Trump's tariffs, and it was a very, very green day across the board, broadly green, led by Nvidia, AVGO, sort of these tech names, these mega cap names. Look at Apple, that was up 0.78%. Microsoft also gained as well. Just the tech sector as a whole, software, hardware, infrastructure, another green day coming off yesterday's green day too. However, it wasn't all tech. Look at Amazon. Amazon was down half a percentage point. Google was down 1.69%. Same with Meta right here. Meta was down 0.6%. And when these two names are down, you're going to get the comm services sector down in a very big way. Other than that, it was actually pretty green price action across the board, apart from like defensive sectors where it was very mixed to slightly down in aggregate. You get a full picture of what we're talking about right here. Now you can see XLC was down 0.28%. And again, that has to do with Google and Meta underperforming the S&P 500, which was up 0.57% today. We also had XLP staples and real estate in the red, with gold down 0.89%. So clearly a risk-on day, looking for the market to get into equities in aggregate. The best performer was the XLK, up 1.5%, followed by energy, materials, industrials for the most part. But we saw most sectors gain, and that led to the S&P 500 gaining. It was actually a very, very solid day across the board. In fact, large caps underperformed mid caps, which underperformed small caps. Small caps roaring back. Growth, core, value, all up in excess of 1.3%. Small cap value up 1.43%. Mid caps also showing up today. Mid cap growth up 1%, but we saw very solid momentum in core and value. In fact, large caps did gain, but it wasn't to the extent of what we saw here in the small cap sector, except for large cap growth, which really did hold its own, relatively speaking. Very, very solid momentum here in the broader market, particularly in the smaller size of the market. And guys, this all stems off one thing. The reason why the market rallied today was some of the economic data. Number one, look at the Red Book Index. This is a weekly aggregate of retail sales. It came in at 4.9%, right? Consumer still not slowing down. We're not seeing that slowdown. That's very positive. But even better was this JOLTS opening number right here. JOLTS openings moved up to 7.39. That's a positive. The market loves to see that. The consensus was for 7.1 million. So on a month-over-month basis, we actually saw job openings rise. We also did see JOLTS quits fall ever so slightly, and it did miss the forecast by about 100,000. Even though it did miss the forecast, the market brushed us because this is still a relatively healthy number in the grand scheme of things. And when you get a really good number here, JOLTS openings, a really good number in the Red Book Index with the consumer, and a healthy JOLTS quits number, you're going to get the momentum we saw in the market today. A broad-based rally led by some of these higher beta sectors and higher growth sectors, as you can see right here across the board. So all in all, solid economic data pushed us higher, but we also saw outperformance in something like Nvidia. Nvidia gained 2.69% today, and it is now the world's most valuable company. Microsoft and Nvidia have been playing tug of war as to who has the top spot right now. It is Nvidia. Another massive market mover was Ford. Ford stock rose 2% today after reported sales that jumped 16.3% in May to just under 221,000 units. Now, Ford's sales were likely boosted by a price cut promotion that the automaker implemented to counteract the potential for slower demand under President Trump's tariffs. As a result, Ford likely took market share from General Motors and Stellantis, which didn't offer similar discount plans, and it remains to be seen how long Ford can sustain this level of discounting as pre-tariff hike inventory dwindles. Nonetheless, the market liking those numbers, liking what they saw. CrowdStrike was up 2% year on the day, but down 6% in the after hours on the back of its earnings. Now, CrowdStrike missed on revenue, beat on EPS. Look at all of these beats, very, very strong across the board. But when you have the valuation at 131 or forward PE, that's where things become a little bit risky for this name. Nonetheless, guys, we are going to break down the full earnings of CrowdStrike in the FinFluential Media, my second YouTube channel. So go ahead, follow me. I'll leave it in the description below. I'll leave it in the comments. Follow me there. About 30 minutes to 45 minutes after the upload of this video, you should get that video right there. And another market mover in the higher beta space was Hims and Hers Health. Now, the stock was down 3% on the day. But at one point was up 18%. So, we paired all of those gains and then some. Now, the reason why we actually saw that 18% move is because Hims is to acquire UK-based startup Zava as it expands its international presence. Zava is pretty much what Hims is in the UK, and they also have exposure in Italy, France, etc. So they're going to buy this company, right, to expand their international base. However, both of them came out, as well as Citigroup, and said they maintain their underperform rating despite this acquisition, and they think their price target is somewhere around the area of $30 and $28 per share. But I think that is absolutely ridiculous. This stock is going to go to $100. We are going to retake these highs for Hims, I think, in the next week or two. If you're looking at a technical trade, this is probably the place where you want to get into Hims, sort of at the $50 to $54 area, aiming again for that $70 area, retaking those highs. I think that's going to happen, and I think it's going to happen very, very quickly. And then for everything we saw today, guys, we had great breadth, 4,300 advances with 2,000 decliners. We saw net inflows here in the market for both the Nasdaq and the New York Stock Exchange, particularly early on in the day. But then we actually saw, net outflows leading towards the end of the day, with the S&P 500 up 0.58%. And then market momentum continues to be as it has been over the last couple of weeks, with stocks at the 100-day unable to retake the 100-day. And the longer-term averages continue to be in this 40% region, but the shorter-term averages looking very, very robust. And we actually retook yesterday's 50% mark in the 5-day and 20-day moving average. Let's see if we can keep up this momentum to retake the 100-day in a lot of the broad market stocks. We need this for the S&P 500 to continue to all-time highs. Now, guys, looking at the charts, you can see a very, very positive day, but really it was one for small caps. The IWM up 1.61%, mid caps, the S&P 400, S&P 600 also up 1.2, 1.6% respectively. We also did see outperformance here in large caps. The S&P 500 up 0.58%, the Nasdaq 100 up 0.8%. Very, very solid momentum. The RSP gaining 0.8% as well. Guys, very, very solid momentum. Looking a little bit red here in extended hours, but can you blame the market after two very, very solid green days, especially with the IWM? It looks like we may actually see a breakout here for the IWM back to 52-week highs, and maybe the alpha could be in small caps over the next couple of weeks, but we'll talk about it when we look at the charts in depth. Now, guys, Europe was kind of flat today, and China was actually up 1.32%. So really, it was like the United States we wanted to be, and China, and then international equities sort of just doing a bit of a churn. But that's to be expected because they've had very, very strong performance out of the gate this year. Volatility did tick down, guys. Look at this, the VIX at 17. Generally speaking, when the VIX is at 17, it's time to sell calls. Anything above 20, it's time to sell puts. So if you're going to sell like 1 week, weekly or 2 weekly calls, that's the place to do it in the VIX. But if you're going to sell more than a month at maybe cash secured puts, in that regard, just depending on the VIX term structure here and what we're seeing. Nonetheless, volatility continues to tick down lower, and this is a supportive environment for us to go higher. The 2-year, 10-year, 30-year yield, the yield complex in general gained ever so slightly, but we're not really seeing much movement at all in the 10-year yield. I mean, if you actually just zoom out in the very long term, the 10-year yield has virtually done absolutely nothing for the last 2 to 3 years, sort of at this 4.4, 4.5% mark, going to highs as high as 4.8, lows as low as 3.8. So a very, very tight range. If you just hop on the weekly chart, you can see what I mean right here. We had this massive impulse move up, and virtually we've done nothing since October 2022. The dollar was up in a very big way, up 0.55%. That's because the dollar has been a little bit of a dumpster fire here. I do think we are going to go see the dollar move back to the 104 area as the TGA, the Treasury General Account, is being drawn down due to the Treasury's extraordinary measures to fund the government. The dollar as a result is going to weaken, but once this budget bill comes into focus, I think we're going to see strength in the dollar. We could go retake the 101 area and possibly as high as the 104 area. I'm willing to bet on dollar strength into the end of the year. Now, as a result of yields moving higher, bonds The ATG was flat, TLT was slightly down, but looking a little bit green here in the after hours. And then Bitcoin down 0.31%. Very interesting. Gold fell, silver fell, WTI gained ever so slightly. And that's because of ratcheting tensions in the Middle East as it pertains to Israel, Palestine. There's a couple of things going on there. And as a result, crude ticked up ever so slightly. But let's actually talk about the S&P 500. Very interesting, guys. If you actually go ahead and look right here, the core wall and the gamma flip actually moved up. That's very interesting, which means options traders move their bets up ever so slightly. In fact, we are just a stone's throw away from all-time highs, relatively speaking, if you actually look at that. However, the move wasn't that pronounced. We also did see the gamma flip move up and the put support move up. For those of you that don't know, above this yellow line, you're looking to buy, dip, sell, rips. You're looking for the top end of the range. Below here, you sort of have a bearish bias aiming for this area right here. But this is positive gamma, this is negative gamma. And in positive gamma, you buy, dip, sell, rips. In negative gamma, you sell into weakness, buy into strength. And that's how you get that very volatile price action. This is negative gamma right here. This is positive gamma. So you sort of get this move up, whereas in negative gamma, you get this very volatile price momentum. Nonetheless, with the core wall moving up, the options market is telling you that it's looking for the next move higher. And that next move higher is probably those all-time highs. I think we're going to see them. The move was more pronounced in the NASDAQ 100. Actually, the core wall right at these all-time highs. So I think even if we do get a pullback here to, the gamma flip, I think you want to be long. I think the market wants those all-time highs. If we actually just take a measured move from where we are in the NASDAQ to those all-time highs, we're 2.64% away. Absolutely insane. And the market is simply just brushing off tariff concern. And here's why. Tom Lee came out and said this on the halftime report today. He said the base case for tariffs was 15% before Liberation Day. The base case is now 10%. That's a 10% tariff on 15% of imports, which is about 1% of GDP. That's like oil going from 40 to 100. We wouldn't say $80 oil breaks the economy anymore. He says long SPY looking for all-time highs. Absolutely crazy to see how far we've come. And I do agree. I think we're going to all-time highs in the S&P 500. But for those of you that want to actually generate alpha, right? I think the RTY is where you want to position yourself. Very, very strong momentum. If we get a pullback here to this 2035 level, buy this because I think we're going to go higher. If the S&P starts hitting all-time highs, we're going to see the 52-week highs hit here in the Russell 2000. And if we take a measured move, right, you can see substantial alpha. You're looking at a 10% move there versus a 1 to 2% for the S&P 500 and the NASDAQ 100. You do have to contend with more volatility, but volatility is the price you pay for outsized returns. Seeing something like the RTY. And also do note that the gamma flip put support and core wall also moved up here. So options traders saying, hey, we are likely going to move higher, but the move wasn't as pronounced as it was in the NASDAQ 100. If we look at European stocks really, really quickly, you could see that we're seeing a little bit of resistance here. Now, European stocks are up about 15% year to date. It's been a very, very solid year for European stocks, but they're seeing a little bit of resistance here at these all-time highs. Now, if you are looking to get long on European stock, maybe wait for a pullback here to this 527 area. This is where we are right now, looking for a little bit of a pullback and then a move higher, potentially retaking these all-time highs here. But just be aware for a little bit of digestion. Now, guys, let's quickly go ahead, have a look at gold. Gold, absolutely insane what's been happening here with the gold trade, seeing a little bit of resistance, right? Which again, tells me that this is still looking like a lower low, relatively speaking. If we go ahead and break below this 3,300 level, then we probably move lower. Look, what you really wanted to see was an even stronger impulse today in gold. We didn't get that. So this is still looking sort of like this forming wedge right here, and it's yet to be determined if we make a move to the upside or we go down. My bias is to the upside, but I wouldn't be surprised if we do see volatility and go lower first. Let's talk Bitcoin. Now, guys, looking at Bitcoin generally tracks M2 money supply, as you can see right here. Now, guys, we were expecting a pullback in this region. What we're looking for Bitcoin right now is a move to the upside, right? So looking for a couple of days of consolidation and then a move to the upside. What we can definitely see, though, is Bitcoin is acting very, very well here in this region. If we actually just go ahead, quickly remove this indicator, reset the chart, and then go back to candles. If you dive into Bitcoin a little bit more granularly, we pulled back from these highs right here. We pulled back to form this low right here, and then we made a move to the upside. This is actually a higher low relative to this right here, and a higher low relative to this right here. And as long as this move continues to the upside and we hold this low right here, guys, I think we go ahead, retake these all-time highs right here and continue the move to the upside as per M2 money supply. So Bitcoin looking really, really good right now. Now, guys, stocks, individual stocks that I do like. I think a great stock that you can buy right now is Abercrombie Fitch. After its earnings, it was up 25%. It pulled back. Guys, I think you want to sell some in the money puts right here, or maybe just, add some equity, add some longs at the $76 area, maybe even buy some calls, maybe 60 to 150 days out. I think before the next earnings call, we're probably going to get back maybe half of this move, potentially to the $100 area, sort of like good for a trade. Keep your tight stops. Guys, I also do like HIMS, right? The stock is overvalued, don't get me wrong, but there's very, very clear momentum to the upside. We've actually formed a base right here. So to the upside, right, we go ahead, pull back. We actually went ahead, retake these all-time highs. So that is a higher high. If we go ahead, hold this $52 area right here for HIMS, we can then go ahead, target these highs right here and these all-time highs right here. So we have, an impulse, pullback. Impulse, pullback. Now we're looking for the next impulse to the upside. And another stock I'm incredibly bullish on, this is a European stock, Evolution AB. Now you can see after the earnings, it hasn't acted super well, but I do think this is low. You buy right here and you're going to close this gap into its upcoming earnings in about 6 weeks away. So you could see a move from about $66 to $88 in the next couple of weeks. So those are three stocks I really, really like right now. Good for trades, good for long-term holds, especially in the supportive risk-on environment. Now, guys, looking at sentiment, we continue to remain in this greed zone right here. However, over the last few trading sessions, about the last 5 or so, we have seen sentiment pull back from this probably close to extreme greed zone right here, closer towards the neutral camp. And I do expect that to continue, especially as the market continues to consolidate. Now, the reason why we're seeing that probably has to do with earnings. When we look at second quarter earnings revisions, right, it is well below the 20-year average. And the only time we get revisions generally in this vicinity is sort of when there's times of turmoil. For example, 2022, the cost of living crisis is one example. Now, we do expect earnings to be revised down ever so slightly in aggregate. However, the second we get below this level right here, that's when things start to look a little bit hazy. However, this does set up a low bar for companies to surpass and could end up being a net positive when second quarter earnings comes around, especially given with where some stocks are still trading at relative to their all-time high. This has both concerning implications for the earnings picture, but it can wind up being a positive, especially if the market momentum and trade policy continues in the direction we expect it to. A big thing on everybody's minds right now, rate cuts, guys. Now, if we actually have a look at what the expectations are for the June 18th FOMC, right now 95% of individuals see no cut. About 5% of individuals see a 25 basis point cut. Now, this is down significantly from where we were just a month ago, right? Where 34% of participants said they were expecting a 25 basis point rate cut at the June FOMC. And to be honest, in my opinion, I think the Fed should cut. Waller came out and made this statement. He said rate cuts are still possible this year, assuming inflation continues to make progress. What I have to say to Waller is PCE inflation last week printed at 2.1%. And Kyle sums it up perfectly right here. He said, at least get the overnight flat with the 2-year. And I completely agree with this. The federal funds rate needs to be flat with the 2-year yield, which is about 4%. Right now, the federal funds is 4.25 to 4.5. So, anywhere from a 25 to 50 basis point cut is what I think the Fed needs to do. This is not a 4.5% economy, especially as it pertains to what's happening in the housing market and the eventual deflation that'll occur from this higher interest rate policy. So I think the Fed should cut. However, my opinions don't really matter. What the market is telling you right now is that the Fed are unlikely to cut, at least according to target rate probabilities. And this is the Fed fund rate futures. Now, diving into the macro, guys, looking at Atlanta Fed's GDP now, this is actually kind of crazy. I have no idea why this is happening, but we saw a move up to the 4.8% here for Q2 GDP tracking. I do think this is going to come down in a very significant way. I think we are going to see this move down probably closer to the 3% level. But yeah, I don't know what the Atlanta Fed is tracking. Things continue to move in the right direction for Q2 GDP. Now, the May ISM which is US manufacturing, showed tariff pressure is beginning to bite for manufacturers who are seeing a slowing in activity, longer lead times, and declining inventories. International demand is also drying up, with manufacturers reporting the lowest level of import orders since 2009, and the ISM numbers actually missed the expectation yesterday, both on the manufacturing index as well as the employment index. So this is not good for the economy. The ISM is a really, really good barometer for where the economy is right now. And this is telling us that the economy is not too hot, especially in the manufacturing sector in aggregate. Looking at data for the rest of the week, tomorrow, the big number here that we need to be paying attention to is the ADP employment change. Now, the consensus is for 115. The forecast is for 70,000. I think we'll probably get a number in between there. But if we get the top end of this range right here, that's very, very positive. If we get anything below 70,000, that's going to be absolutely detrimental. The last number was 62,000. And this is going to lead us into the initial jobless claims and then into the non-farmers. But we'll talk about what to expect for those tomorrow. But ultimately, the ADP numbers is what's going to matter tomorrow. And then looking at data, guys, Dollar Tree reports before the bell. That's the only big name for the bell. Then after the close, you have MongoDB 5 below, and that's about it. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.